Okay, good evening. So today we're going to be talking about technical analysis with price action. So what is basically technical analysis? Technical analysis is basically being able to trade with the charts or those dingly things you're always seeing out there. Whenever you use those to trade, that is simply using technical analysis. And anytime someone uses technical analysis to trade, that person is known as a technical trader. So if you are the person that looks at support and resistance and all those things on the chart regularly, you're a technical analyst or a technical trader. So why do we need to understand technical analysis? Because technical analysis is one of the most popular ways of being able to trade. There are three, but among those three, technical analysis is one of the most important that you must know in the market. So why? We trade technical analysis because technical analysis has to be more about the nature of price. It's more of the nature. Forgive me for my 5-year-old drawing, but it talks about more of the nature of price than any other thing we know in the market or any other thing I've seen in the market. So it's very important for you to understand this concept, and it also helps you to trade with a clearer responsibility. I hope that was right. What responsibility? Not too sure, but I think you get what I mean. Okay, you might not really get it, but it makes it to clearly understand what price is doing in the charts. So with technical analysis, we came to know about price action. So price action is basically the historical movement of price. Now, too much definition, but the most simple way I will put it is basically the way that price moves, is the nature of price movement. Now, why do we say so? With price action, several concepts such as support and resistance, market structure, chart patterns, and other things came up. So whenever we see that price is moving, whether going up or down, let's say it was going up, we know that price don't just move in a straight line like this. Sorry, let me look for a way to clear all these things I have in my chart. Do they have a clear button here? Nope, they don't, so I'll just Ctrl Z. So whenever we see that price is moving, whether up or down, we always notice that it normally moves in a particular way. It doesn't just move straight up like this and continues moving in that direction. No, price actually moves like this and so on. Now, these things repeat in the market over time. That's something about price action. It keeps on repeating over time, over and over again. So whenever price is moving, it doesn't just move in a straight line, and it's always repetitive. So you hardly see price move in a straight line. I'm pretty sure I can open my chart right now, and you'll be able to see that you will never see price moving up and down just in one straight line. It must always go up and come down, or it must always go down and come back up a bit. So why does knowing this actually make us to be able to trade? Now, whenever price is moving and it's about to switch direction, it normally shows some little hints or signs that it's about to change. And whenever we see these signs, we can capitalize on it to be able to know the next movement in price. Now, what do I mean? So now let's analyze an uptrend and a downtrend. Now, whenever we are dealing with uptrend, first of all, you have to understand that the full movement of price, the overall movement of price is going where? Up. That is an uptrend for you. That is the most simple definition of an uptrend, when the full movement of price is going what? Up. And same with a downtrend, when the full movement of price is going down, or in a downtrend. So, but we can break this further. So let me draw a typical uptrend for you. So we normally see price do something like this, and this. So price normally has a starting point whenever it's moving. Now, this starting point is always from a low point. We all know that price cannot just continue going up. It will always start from somewhere which is normally called a low. I'll mark it as L. And then it pushes to a particular point here. Let's call this point H. God will help me with this line, primary one drawing. Now, whenever it does this, the next thing it always does is to push downwards to a particular point, and this is going to be a low. But one thing I want you to understand is that the point that this place is and the point that this place is, this new point that is coming, that is showing here, is actually higher than this previous place. So we call this place a what? A higher low, a HL. Now after doing this, it pushes up to form a new what? A new high. This place is low, this place here is higher than this one, so we call this a high. Then it comes down to a particular point and then pushes up again. So what do we call this point? This is a higher low, because we see that price actually does what? It forms another lowest point and then goes up. So now what about this new point it forms up here? Because this high is higher, this one here is higher than this one here, this is going to be called a higher high. So one thing you need to understand, that this is a low, this is a low, this is also a low, and yeah, this is it, and this is a high, this is another high, and this is another high. Now being able to understand this will take you to a long journey. Now one thing about forex is that whenever price is in an uptrend and it's moving like this, it keeps on doing this for a long time. But in a situation when it doesn't have enough strength to continue moving in that upside, we will see price begin to do something like this. Now it won't be able to form new higher highs again, but rather it will start breaking down to form lows. And for us to actually know that price is shifting from an uptrend to a downtrend, we have to see price pass this previous high over this previous higher low over here. Now in a situation that price should do this, we know that price is in a potential of continue going where? Down. It's not yet confirmed yet, and do not take my word for it. That's one thing about forex, why people fail a lot in forex. They just assume everything everybody say is true and they continue trading. Do not take that. Check it in the market and see whether that actually works. So in a situation where price should break your higher low and continues going in that direction for some time, we could see that price is about to switch direction of its trend. That's one of the signs that price does. Whenever price fails to make new higher highs, it means that price could potentially start doing what? Tanking. It will continue going in the opposite direction. It could form a new reversal. Yeah, so that's basically what it is for an uptrend. We see higher formation of higher highs and higher lows. So what about a downtrend? What do we see in a downtrend? We see that price come from a high point, comes down, go up, comes down again, go up, comes down again. Now this is a downtrend. So we always have a high, we have a low, we have a high, we have a low, we have a high, and we always have a low point again. Now this high, this is a low, but when it pushes up, this forms a new high over here. So like the uptrend, we notice that one thing that is different is that this high here is higher than this one here. So in another words, this new one that was formed here is actually low. So what we'll call this, we call this a lower high. Then price pushes down and form a point that is lower than this one here. So we form a what? A lower low. Here is also something lower. Oh shit, what did I just draw? So you can see this is a high here, this is also another high here, but this new high that was formed is kind of lower than this previous point, so it continues like that and so on. So what does this show us again? It shows us that price is pushing down, going up, pushing down, going up, pushing down. Nah, that's not just what I want to make. Just joking about that. But what you should understand is this is basically the structure for every downtrend. So like the uptrend, price doesn't always pass this previous point. If anything that price should happen, anything that happens and price should pass through this previous lower high here, it means that price could continue moving in this direction. That means it has formed a reversal or a new trend and it will continue going in that direction. It happens. Oh yes, it happens a lot in the market. There are reversals that occur and there are continuations that occur. So let us break this thing further. Let's break this thing further. So we now know the difference between an uptrend and a downtrend. If you have any questions, you could always contact me on WhatsApp. I will leave my link in the description on the WhatsApp. So let us take an example of a small uptrend like this. So now this is actually going deeper into the trend. Now let's say we're in an uptrend. The overall movement is going what? Up. Now the movement in the direction of the trend, that is this up move that you're seeing here, this up move and this up move, it actually has a name. It actually has a name. Now this is called an impulse move. Impulse. Oh God will save my spelling. My God will save me from this spelling I'm spelling here. We have an impulse move. This is also called an impulse. Now this impulse move signifies that's a very wrong English. This impulse move shows us the direction of the trend. For example, if we are on an uptrend, we will see that there is a large movement. So the impulse move is simply this large movement in the direction of the trend. So what do I mean? Now let me clear this. This is too much disorganized work. So we have something like this, any large movement in the direction of the trend. Now this is an uptrend. Any large movement in direction of the trend, such as this, let's give it I. This is going to be an impulse move. So these impulse moves are actually in the direction of the trend. That means it shows us that price it's moving in one direction, basically. Now, why is it important to know this? It's important to know this because we can be able to anticipate an impulse move. How? Through this short move that you're seeing here. You see that whenever price goes up, it always goes down, right? Now, through this period that price is going down, this is called a pullback. I'll give it a P. It's called a pullback. Other name for it is a retracement or a correction. People also call it a correction. So, but you could also make use of pullback, but sometimes I might refer to it as a retracement most of the time. So this P is called a pullback. What is a pullback? A pullback is a short-term move, is a temporary move, short-term temporary move that does not last long. It normally goes in the opposite direction of the trend. As you can see, we're in an uptrend, but where was the pullback going to? Down. Uptrend, down. Now, why is it important to understand this pullback? This pullback could show us where the next impulse move could be. And what do you look at this? When you look at this, you see that the impulse move is always a long move, but it's always a large move. Good. If we know where these pullbacks are forming, we could try to determine where the pullbacks are ending so that we can join the main trend and continue riding that trend in profits. That is basically it. That is the way I personally trade. I look for the end of pullback and then I capitalize it to form, I capitalize on it on the next impulse move. So in a situation like this, I see price moving up and then it then forms a pullback, maybe doing all sorts of nonsense. If I have something that tells me that, oh, at this point could be the potential end of this pullback, what do I know? After every pullback, there is a what? Impulse move. So it's impulse pullback, impulse pullback. So your main concern in the market for you to be able to get up to large movements is for you to find the end of every pullback. After this pullback here, at the end of this pullback here, what did we see? An impulse move. this is basically it. Impulse, pullback, impulse, pullback, impulse, pullback, impulse, pullback, impulse again. So understanding that is very, very important in this market. So this is the example for an uptrend. Let's go to a downtrend. So in a downtrend, we're seeing something like this. So now remember, the impulse is the large movement in the direction of price. So this is an impulse, this is a pullback. So let's highlight this move because this is the this move is very, very important, the pullback. We also have another impulse, but this is the what? Pullback. I'll highlight this again. Good. And then we have another what? Impulse again. So remember, at the end of every pullback, what happens next? An impulse. Every time that price pushes down and goes back up again, what could potentially happen? Another large movement downward. So imagine you were able to, after you saw price moving up to this point, you say, oh, price could start a new impulse move because it has showed us a pullback. What do you simply do? You simply take a sell around here, and then you can be able to ride this move. And if you are patient enough, after the next pullback, you could also be able to enter another trade to ride this movement forward. Now, understanding this is very, very premium, and I'm sure I've tried my best to explain this. So what have we learned today? We'll be able to understand an uptrend and a downtrend. So we'll be able to see an uptrend. I'll just write uptrend. We'll also be able to see a downtrend. Another thing we've learned today is impulse and then the pullback. So this is an uptrend. This is a downtrend. Oh god, sorry for putting you through the stress of me trying to write something. Downtrend. We also have the impulse. And the pullback. Now please, I do not want you to take my word for all these things I'm saying. Do not just take my word. I want you to go out there and test it yourself. Go out there, test it yourself, and then whatever you see, you bring it back to me. Or if you have any questions, you could simply put in the comment section, or you could message me on WhatsApp. By the way, don't forget to like and subscribe this channel. I'm putting my best to do this, and I know the kind of stress I've gone through just today to be able to record this. So these are the most important things for you to trade. You also have you have to be able to understand an uptrend, a downtrend, an impulse, and the pullback. So next thing we'll be talking about, the next thing, let me just put an N instead of writing next. We are going to be talking about support and resistance. Support and resistance. And we're also going to be talking about market structure, which is more of trends, but we're going to go deeper into it to understand why price actually moves this way. So I'll talk to you in the next video.